trading at its best.
So just so you know, I'm Mike Swanson with TradeWest Forex, and we do these usually every Friday. Sometimes we bump it to Monday, but usually every Friday at 2 p.m. Eastern, and then we usually do the blog post about a day before. And this one was a little sooner, quite a bit sooner than that, I guess. It was in the last hour. But that way you can get a little summary of what we're going to talk about. And then the webinar, we really get into the details. So it's really important to come to the webinars to get the most out of the topic, each topic. And we do record these, and we put them on the same page that you sign up on. You'll see those just below the sign up. I'll show you that maybe at the end of the webinar. Okay? I guess I could have had that up well, introducing myself. But anyways, let's move right along here and talk about today's topic is true support and resistance. This is something that a lot of you, you're using support and resistance, but you're probably not really understanding what's creating it and how it all works. If you came to last week's webinar, you might have an idea because this is going to be similar. It's a similar concept. But we'll be looking at market sentiment indicator, trade examples, and what exactly support and resistance is. And first off, I'll tell you, support and resistance, most traders learn about this in their sometimes the first few days, sometimes first few months. But support, let me go ahead and bring up some charts here. Okay. Support to most traders is the previous swing low or swing high. And I've got this little fractal indicator on here just so you can see. It's kind of spotting those for you. So you see up here, this is a resistance. Resistance is a level above the current price. So here we are at the current price. Resistance is any one of these swing points. This is what most traders are looking at, support and resistance this way. Support is the swing prices below the current price. And so the way you look at this is when the market comes down to this level, it's believed that that will be a difficult level for the market to break through. So a lot of times it'll come down and bounce off of that level, kind of like over here. Market came up, came down near that level, and bounced back up. And same thing here, it went up and bounced back down near these resistance levels. So that's kind of the typical approach to using support and resistance. But what we're going to talk about is why does it sometimes do like it did here? Why does it sometimes give you a false breakout, or it breaks out and then bounces back? See right here, the market tested through that level and then quickly pulled back and went the other direction. If you can learn that, obviously that's pretty valuable information to know when this type of thing's happening and to be able to adjust for it. Let me give you an example. If you're over here, say you bought somewhere in here, maybe not even that good. Let's just say you bought in the middle here. Well, what most of you are doing is putting your stops right here, right? Just below maybe that level, just below support and resistance, or support in this case. Well, this is one of those cases where you feel like your broker ran your stops, right? The market went down, took you out, and then went the other direction. So you blame your broker here. Well, if you remember in last week's session, we also talked a little bit about why this happens. It's because the market finds what we call limit orders. It means it's orders that want to buy at these better prices down here. And that could be traders that are bidding, placing bids on the market. So if there's a heavy amount of bids here, the market will bounce up. So if you remember in last week, we drew these little boxes on the chart to kind of represent what those orders might look like. They might be sitting out here where a lot of traders are thinking they're here. And instead they're quite a ways away, and that's why the market easily pushes through and bounces back. Or sometimes it might look like this. It might look like, yeah, sure, there's some orders here, but there's a good chunk of them, so it needs to get through all of these to continue. So I'm going to show you how to find this information. That's what we're doing in the webinar here today. But it's really important that you just understand that just because you see a fractal or a swing high or a swing low on the price or on the chart, that does not mean that the market's going to react to that level as strong resistance or strong support. If here's another example right over here. We could look over here and you can see there's that resistance point. But look at how the market just quickly broke through there and took off. So this is the thing that if there's a lot of ways you can use this information. Sometimes you can use it as knowing where to put your stops, knowing where to take profit, or even maybe breaking out and taking a trade. Okay, so let's move on to market sentiment, and that's where you're going to get this information. So there's a few brokerages out there that offer this information. They will tell you where their limit orders are in their books. You can see Dukascopy does it in the market depth, and there's some brokerages that do that give you the market depth, but it's a really crude way of using this information, and it's really not very valuable for support and resistance, for finding out where the major support and resistance is at. And that's because you're only seeing a few pips at most of price levels here. So you can only really tell short term what things are doing. So let me bring up a resource here that we have in our members area. Give me just a second to bring that up, and I'll show you how this all works. Okay. Okay, so here we are in the members area, just on our home page. You can see below all of our trading room session replays. You'll have market sentiment, and there's a section here you can select the currency pair and then the time frame. Okay, so say if I'm going to go look at the euro dollar. If I'm day trading, I'm going to go down to the day. That's going to pretty much show the last 24 hours or so of limit orders that have come through the market, and stop orders. I forgot to mention that you're not only going to see support and resistance based on limit orders like we taught in the last session, but you'll also see stop orders. And stop orders can also cause resistance because they also need to be filled before the price can continue. Okay, so basically what you're seeing here, this is buy orders on the euro dollar in the last 24 hours. Now, if you see green below the price, those are limits. If you see the green above price, those are stops. So look how interesting this is, okay? Pay attention right here, because this part is really going to pull it all together. Look at this green section above the price. A lot of traders were looking at the support or resistance, and you'll see these orders were just beyond that. And then they got a little bit more got added on here. You see, it's not just at this swing point, though. It's not just right here. It's actually slightly above. Sometimes it's quite a bit more above. But in this case, it's hovering just above price. And then look what happens right here. Market comes up, tests through the resistance, hits those orders, and then bounces back down. So do you see why that happened? It's because there was orders here. It found resistance, real, true resistance, and bounced the price back down. And then you might ask, why didn't it go down further than it is right now? Well, look at this dark area. The darker the green, the more significant the resistance, or support in this case. So if you're looking at here's your swing. Hopefully everybody can see this. Maybe I can zoom in a little bit. That'll make it a little better. Okay. So here's your typical swing point that, if you were a buyer up here, you've got your stop below here. Well, there's a lot of limit orders to buy below here, and you'll see they're not right on that price. They're quite a bit lower. They're about 20 or 30 pips lower in this case. And as the market went up, the orders came closer to the price. As it went down, they bumped away a little bit. But overall, this is a really strong support level because there are limit orders to buy. So as it comes into this area, you'll see this green starts to go away. It means it's filling some of those orders. But as it gets down here, Some of the orders continue to get filled, but it's really strong. So if you're going to put a stop in, you don't want it right below here. You want it below all this green. You're going to want to stick it down below all this dark green. That's just one way of using this information, is to basically see where the potential false stop outs are going to be, where all these traders are getting filled into buy, on the buy side. It could be that they sold up here and they're taking profit. It could be that they have orders to enter the market. Okay. So Hal brings up a point. I guess that's not exactly what I was saying with these orders. I wasn't saying that these buy orders were causing the price to go down. Just showing how some of these orders were getting filled and then the price went down. That doesn't mean, what I'll have to show you is we'll show you the sell side. We're getting to that. So yeah, I might have confused some of you on that with these stop orders. All I was doing is showing that there were traders with stop orders here. Okay, so it was people that were selling down, over here maybe, and they had stop losses here. So I was just kind of showing you what typical traders are doing. They're putting stops, just right around the resistance point, and then they're getting taken out. So that's not what drove price down. It's just interesting to see those traders that were doing that. When I come down here to sell orders, you'll see how that's what drove price down. Okay. So this information, it's right in our members area, and it's updated here, and you can look at the different time frames. You could go up to week, and that's going to show you the current week. You can see some major support over here, and how eventually that held, and the market bounced up. As you see right here, that line all the way over still held. It didn't get through there, and it went up. Okay, so this stuff really can be very valuable in helping you determine where to put your stops, targets, and even when you're going to enter the market. You could go up to the month, so you can see those really significant areas. Okay, there's a couple different things here, though. I've just been showing you buy orders. Let's go down. We'll look at sell orders, and then we're going to look at net, which is actually where we will spend most of our time when we look at this information. But let's look at sell orders here. Okay, you'll see the same thing. When you see the dark colored or the red above price, those are limit orders to sell. Those will cause resistance and cause the price to want to bounce back. When you see the orange or the red below the price on this chart, that's a stop order. So again, you see the same thing. You see a lot of traders putting stops just below price. And so, when the market comes down and hits those levels, it takes those traders out. And like I said, it doesn't mean it's going to go back up. The way we know if it might go back up is we go look at where the buy orders is. So to make this easier, there's a chart we have here that nets everything out. It takes a net of the buys and sell orders, all the stops, all the limits on both sides. And this is where you can use the information to find out which direction it's more likely to go. Most of the time, you're going to see that it's limit orders are always above to sell and below to buy. There's always a dominant to buy below, sell above. But it's still nice to come up here and just see where other traders might get trapped and might have a false stop out. So let's show you how you can use these together. If you were looking back here at this support level, as maybe you're going to buy here and you're trying to find out where to put your stops, and as you take the trades, you can see where other stops are at, where the price might drop down and go back up. If you're looking at this, you also want to come down here and look at that net. So do you notice how this is just above 3,200? These orders these stop orders. These are orders to sell just below the price. Well, if you come down here, the significant orders to buy are actually slightly lower than that. And if you were going to put a stop in, you wouldn't want to be like the rest of the crowd here. You would want to be below these dark areas. So if you're down here, that way you're going to survive these potential false stop outs. Okay, let's show you an example that played through. Okay, here is an example. The market came down. Let's see. Let's look at it as you bought. Let me see if I can get my little drawing tool to work here. Let's say you thought this support level here was going to hold. You bought, or maybe you just had some indicator told you to buy here. Hopefully you can tell I'm drawing a arrow to buy there. Oh, it's going to disappear on me. Anyways, so right in here, you buy. But you're trying to find out how far off to put your stops. Well, look, you see that everybody else has got stops right here and then right here. And what did the market do? Well, it came down and stopped them out. Since you have this information, you would know not to put it there. You would go up and look at the buy orders, or you could go look at the net, and you would see that here is all the strong support. You would want to put it just below there. And if you look, that's about right in here, right? Just below. That kept you in the market. The market came all the way down, took out those other guys up here. You know, all those orders and these orders were gone. And right here, it did not reach below that dark green area. So we would have been able to stay in that trade and ride it back up. That's what we're all trying to do, right? We're trying to avoid getting stopped out and knowing when we should hold and when we should close. Now, if we were up here, you know, there's no support there, we might even close our trade, just knowing that there's support way out here. We might even hedge our trade or, you know, sell, knowing that there's the strong support is way out here, and we could make profits selling on the way down. Okay, so I'll give you a few more examples of this. Hopefully this is making some sense and I'm not moving too quickly. Let's make sure. Let's see, I've got some questions coming through here. So those were short stops getting hit. So yeah, that's what this was up here. So this was when you're looking at the individual buy and sell orders. If you're looking at buy orders above price, those are stop orders, right? Because they want to buy above at a higher price. A higher price for a buy order is a stop. A lower price for a buy order is a limit. Okay, and for a sell, the higher price is limit because you're selling at better prices, and the prices or the area below price is stops because you're going to sell at a worse price. So yeah, it doesn't always mean it's somebody that's buying or selling all that's already in a trade. It could also mean that they're using it as a way of getting in. So you have to remember it's not always, you know, somebody sold here and their stops are up here to sell and get out. It also could be they want to sell here. But for the most part, it's probably going to be, if it's breaking these significant levels, it's going to be traders with stop losses on a sell order. And that's why, you know, the market came up through all these levels here, took them all out, and a lot of traders that were in here were thinking something's wrong. You know, why is the broker going against me and taking my trade out? Well, that's not always what's happening. If you come down here, like I was saying, and you look at the actual sell orders, sure, some of them are getting filled, but look how far up they went. There were significant orders back here, and then they came back in as the price approached here again. So here the market came up, and then again it found that resistance and couldn't go through. It took them out here, but when you're watching price here, you would look up and see there's more significant ones here, and there's a good chance the market will come up and test. Now, there's going to be times it breaks through it all. If the market's really strong, it'll take it all out. But this is still much better than just using support and resistance from the candles or the swings by itself. Hopefully you can see that. Okay, let's see. The values on the left are far apart. Is there a way to put more values on the indicator? Well, no. This indicator is derived from actual real traders' orders. So you get that's why it's market sentiment, because you get to see what the market is, how the market's really responding. If you see traders putting stops out here, you know there's probably a really good chance that they're buyers in here that have bought these swings. If you see that there's this really strong red area above price, you know that it's from traders that are long and are looking to take profits here, which would put pressure on the market, or it's traders that want to sell at these levels. So that puts the pressure on the market. So this is all based on real, where the real order flow is at. And the reason that, sometimes it's pretty far away, you see those gaps, is because there is no significant volume in between. And that's what makes it so the price has no problem pushing through some of those swing highs and swing lows, right? Look right here, for example. Okay, here's a swing high. So you've got traders that thought, oh, there's got to be some resistance here, and they go ahead and put their stops right here. Some of them put it a little bit higher, and they move it up a bit when the price comes. You know, then those traders got stopped out. Maybe more guys sold here, and then they went and put their stops up here, and it's the same game over and over. These are the guys that get stopped out because they're looking at, this has to be a strong level. Well, if we look over here, that level got taken out. If you go look at the sell orders, those traders got filled. It was a lot of volume, but they eventually got filled, and that was a lot of sellers that pushed the price down, right? So all these sellers that were sitting there for a couple of days there, the market finally was able to fill the majority of them. That pushed the price down. You know, then new orders came on the market, and then again these ones were filled. So you can see the market was really pushing those orders hard to go up. It eventually filled all of those orders, went down. Now, again, there's no resistance until more orders come up. You know, as more and more orders hit the market, that's going to put the pressure on the market. If there's no orders, then the market's going to find it easy to head up, just like right here, okay? If you were looking to sell right here, you would want to be, or actually you'd want to buy here. Let's look at it if you wanted to buy here. This would be a great place to buy because you can see the next strong resistance level is way up here. So use the gaps to your advantage. If there's not a lot of significant areas of support or resistance, trade those. Buy here, and then wait till that resistance shows up, and then you can start to close your trade out here when it finds that resistance. And then, you know, when it comes up here and fills them, then you want, you know, that's a reason to hold the buy trade because now it's taken out those orders. As soon as it finds significant levels, then you know, then you want to start to get out when it finally bounces off and holds those levels. So this is something you might find it difficult to trade exclusively by itself. It's really not designed to be a strategy, you know, standalone strategy. One reason also is because this information is only coming from limited resources. We're not able to get all of the market participants' orders. We're not seeing market orders. There's all of those kind of things that come to play, and that's why this is not going to be a perfect, you know, standalone trading strategy. But it's definitely very, you know, very useful to see what the sentiment is for most, you know, traders speculating in the markets, and you can still use it to find little insights of where the price might be going, where it might find support, and that's definitely very useful. Okay, let me see. I got a few more questions here. So this volume is based on just basically all the books for the resources that we're plugging into here. It's basically coming from, you know, any trader that's on their books that has physical orders with them. So if a trader is using, you know, stealth mode, or they're hiding stops and targets, or they're not using them, you're not going to see those orders. But this still represents hundreds of thousands of orders. We're talking, there's still a huge amount of orders here. The other thing too is if you want to see it more, you know, not 100 pips at a time like you're saying, that's when we just change this down to the day. Then this kind of zooms in and lets you see short term. That probably answers your question, George, about the gaps. I think it's good to understand the way I explained it, but also if you're looking for things that are closer to the price, it's still the same information. It's just this drills it in, you know, zooms in more for you when you select time frame on day here. And you know, we can go through other pairs here. There's quite a few that we have access to. You can even go down here to gold, see what the gold market looks like. There's a whole bunch of buy orders down here at 1350 that may act as support. You can see there's a couple stop orders. If you go to net, you will see that the majority of them at 1350, it's buy orders. So it should act as support. But if you also look here, you'll see first there's an area that might trigger a breakout. There's quite a few sell orders down here. So, if these orders are getting filled, these orders below the price to sell, if they get filled, that could cause the market to break out lower. So you don't usually see that very often where it's, where there's actually quite a bit more on, or limit orders below the price on the net. Okay, so let's make sure, I've got a couple more questions, then we'll summarize some of what we talked about here. Yeah, any one of our members that joins us has access to this at the bottom of the members area. So if you've joined Momentix, that's our recent program, then you'd have access to that. This comes from a broker that acts as a liquidity provider. There's a few different brokers out there that'll do that, but this does represent a good share. We're never going to be able to get it all, but this gives you a very good share of the good chunk of the market that we're looking at here. Is it filtering out fake orders as you see in the futures market, where it may show 1,200 buys and only ends up 300 in time, and sells as they constantly play games? So yeah, I see what you mean. It's, some traders might be out there putting in orders. Could be brokers and banks making it look like there's support or resistance, and then deleting it when the price comes. That can happen. I mean, there's going to be no way of really filtering that. We don't know if traders are doing that or not. That's just part of the game. That's again why it's not going to be 100%. But the thing is, that's why the more significant color you see, the better, because when you go to place a stop and limit order in the market, you still have to have the liquidity to put it there. So people can't a trader can't just go in there and say, I want to put 10,000 lots, limit order here, and do that. So it's still going to have to be, they're still going to have a pretty big sized account. I don't think any one trader is going to be able to, or even a broker is going to be able to come in here and put one order on to try to fake the market out. So the key with that is that we're just getting enough orders, hundreds of thousands of orders to generate this, and that you're using the darker color, and that'll help, in a way, I guess, filter that for you. So this is not all sources. There's quite a few liquidity providers that do not provide this information. So it's not showing us the entire market, but a pretty good share, pretty good sample of it, which still gives us a lot of insight of what other traders are doing out there. You don't have to see the whole entire market to get that picture. In short, I guess you could say what we're trying to use this information for is to look what others are doing and do the opposite. We don't want to follow the crowd. We want to build strategies against the rest of the market to build an edge against them. Okay. Yeah, market makers and liquidity providers definitely have access to this information. They provide it. But that doesn't mean, it means they're also using it against traders that don't know it. I mean, that's the way you look at it, is they can see this too. They can see that there's stops up here. So if the market's thin, they might actually buy, and try to put pressure on them, push the market up to hit those levels. But it's going to take quite a significant amount of trading to do that, to move the market like that. And so I would say, bucket shops could use it to their advantage, because they don't really need liquidity to move the market. They just push some buttons, but if you're with the right, set up with the right brokerage, you don't have to worry about that. So this updates. You'll have to refresh the page to make sure it's updating and active. I think it's on a 30-minute timer. If I have to double check on that, but I've only seen about 2 or 3. I know FXCM has a resource, Dukascopy has one. There's a couple of them out there that have this type of information. They just do it a little differently. This one's, I think, is nice because you can actually see almost like a heat map. You can see it just much more visually. You can see what's going on. So you want to see liquidity below the current price on the euro and where it is above price on the Aussie. So yeah, we can look at Australia. On the Australia dollar, you can go look at the net and see that there is the next significant level is quite a bit above here, above the swing point. You can see there's some just below it, just below the swing point, but the significant amounts are sitting at 9,300. But there's a little bit at about 92.30 that it might hit that level and bounce. That's where they were here, and then they came back. So that's what's kind of holding that resistance off right now. And then on the support side, it's way down here at 9,100. The significant orders are just below 9,100 to buy, which is not at these swing points as you'd expect. So the market's kind of got room to breathe here. It could, there's a good 50, maybe 40 or 50 pips in either direction before it finds support or resistance, or any significant support or resistance. And if we go to the euro, you're looking at just below 3,300. Those orders have been holding strong, and that's putting pressure on the market right now. Some of them have been removed and taken out, but there's still a good chunk here, maybe 32.90. And then the real strong ones are down here at 3,200. They've been holding there for quite a while. If we go to the week, you can see there again. And you can see how they put a lot of pressure on. Look what happened when the market tried to dive down down to 3,200. Really strong orders. Some of it was getting filled and removed, and that was bouncing price up, and it went up again. But then it came down again. Some more were down here, and it took those out, and then it bounced up hard. So now you see there's that big gap. There's orders starting to show up behind price again here, though. Starting to fill that gap. But it's kind of interesting to go and see where the price might bounce, like it did here. This is where you start to buy. So there's one way of using this, like I said, is to actually take trades in that direction of these strong orders, and you buy right here. But you do want to make sure and you go look at that net. So here you can see the sell orders were way up here, so you had plenty of room, and the buy orders were strong right on the price there. So that's where you buy, knowing that it's going to be easy for the price to head up with a significant resistance way up here. Of course, you want to use this with things like Momentics and your other strategies. It's going to be difficult, you'll find, to try to use this all by itself. Some traders can probably do it, but most of you are going to want to have a foundational strategy first, and then use this as to supplement that system. So Rich has got a good example here. Say if you're trading Momentics on the 4-hour and your stop is a lot lower than, say, the sentiment charts are showing, would you stay with the Momentic stop or use the sentiment chart for the stop placement? Well, if you're watching the sentiment charts, let's say I'll just look at it here. Let's say Momentix said to sell right here, for example. If Momentix said to sell right there and put a stop right here, then you'd probably want to adjust it above this red area. Because as you can see, it came up here and tested some of those sell orders, which gave it resistance and liquidity to push the market back down. So I would look at it that way. If Momentix comes in and puts my stop order in the middle of this stuff, and I might want to push it out. What you have to just be careful of is that, if Momentix has got a tight stop and a tight target here, you might not want to open the gap that much on your stop. And if you do, you're going to probably want to adjust the target side to these buy orders where it's going to find support. Put your target about right there, and your stop. Your stop could go, there's that dark area right here, so just outside of there. But this stuff just takes time, practicing, watching it, treating it with your strategies and seeing how it best fits into the mix. So Ed says, interesting because news hit this week, and when it got to 3,200, it took off to the upside fast. Yep, and that's something you'd notice if you were watching the news, wondering if you were selling in that news when it was going to stop, or wondering if you could try to buy it and counter trend, drive it back up. You would have seen it, hit some of these levels. It had momentum, but those orders caused support. And when it started to head back up, that's when you jump in or get out of a sell trade. And if you get in here, then you'll see all these orders here, so you put your stops out here. Rich says, I have to say this is really interesting and important piece of info. Thanks. Yeah, I think this is the kind of stuff I try to teach. A lot of people are out there just teaching the support and resistance indicators, and hopefully, this stuff doesn't come off too confusing. But this is the real deal. What's driving price? Just like the last week's session or the webinar we had Monday. I explained exactly what's driving price, what makes it move, and that's what most people don't understand and teach, but I think it's very valuable to understand, what's really behind the price, what's moving it, what's stopping it. And so hopefully you guys have learned a lot from this webinar. I'll take maybe a few more questions, and then we're going to probably wrap this one up, and we'll get the recording up so you guys can review everything we've talked about today. What is the cumulative net buy-sell diagram? Okay, well, what this is doing, like I was mentioning earlier, is it's actually summing up. It's taking all of the buy stops and limits, and then taking all of the sell stops and limits, and combining them so you can see which side is stronger. Like we were just showing you on the gold chart, it's different than you see, for example, on this one. This one has got pretty much it is all green below and all red above. But if we go to gold, for example, you'll see it's different. You'll see that there's sometimes red below and sometimes red above and green above. So what that means is, even though if you're looking up here at sell orders and you're looking at buy orders, even though there's support here, it's not very strong compared to the amount of sellers, which means in the net it shows up as just the red. And that means it's summed it all up, and that's the amount of sell orders here. So if the price gets down to here, this could trigger a breakout to the next support level instead of support, like we were seeing on the euro a minute ago. Okay, so same thing right here. Look, here's an example of how it played through. See this big block of buy orders that was actually above price? Okay. When those orders got taken out, when all those orders were filled, the market took off to the next level. So, like I say, if we go back to let's go back so you can see the difference real quick. If we go back to the euro, the net is always pretty much showing red above, green below. You go back to gold, sometimes you are seeing green above and red below, right? So it's a little different. And like I say, that's what that means is there's a lot more buyers or buy orders than sell orders at these prices net total. When that flips, you know, up here when you see the sell order, there's more sell orders up here. That's going to cause the resistance. When it's buyers, it's going to cause the breakout because those are triggering. Those are not acting as support, right? Support is when it's below price. If you see green above price in the net, that's a place where the market's going to have a breakout and take off. You see, when it was filling all those buyers, it was just taking off and loving, you know, that liquidity, just eating it up and taking off through those levels. But on the other hand, when it gets to sell orders above price, that's resistance. And if it starts to fill those, it goes down. Does that make sense? So here was a little green area. It fills those orders and takes off to the upside. Again, a whole bunch of buy orders net, fills those orders and pushes it further up. Yeah, I don't know. I guess it zoomed out again when I clicked it. Hopefully that's... So I'm just hitting Control plus on my keyboard to do that. So if you're on the site and you're trying to get it bigger, that's how you do that. I think you can even use different tools on your mouse to do it. Okay. Hal says, I agree completely. This is great stuff you don't hear elsewhere. Yep. Strength and weakness. If you're talking about currency strength indicator, I have not got a chance to finish those yet. It might be, you know, maybe a few more weeks. We haven't got a chance to work on those yet, but we will keep you posted if we make some progress on that. So these, to get access to it, it's in our members area. So if you join our Momentics program, pretty much any of our programs, if you join them, then you get access to it in the members area. Edgar says, this has been the most eye-opener I have ever attended. I'm glad to see that. I was hoping it wouldn't come off too confusing from what you're used to because it's pretty valuable to understand this information. And yeah, so how to use it with the buy and sell orders with Momentics. Well, let's see if I've got a chart here. We can show you that. Okay, so here's an example. There was a euro-dollar trade on the 1 hour. You know, it was buying here, took profit, took some out of the trailing stop. But what you were looking for here, Bryce is asking, you know, what could you do with, but you know, how could you use market sentiment with this? Well, let's go see what was happening. This is a few hours ago. It was testing this resistance from the 15th. And about 6 hours ago, it tested through there. So let's go look at the sentiment, see what we could have done. So we'll go up here and change it to the euro-dollar. I'll set it down to the day. Okay, and we're going to go look at the net. And here's what you could do. If you were buying, okay, let's flip back and forth so we can see these both. Give me 1 second. Maybe I can set them up side by side here. Okay. Okay, so I've got them side by side for us now so we can see We can see them at the same time. So if you were looking back here at this resistance level and you were buying into this trade, well, as you start to take profits, one thing you could have done is been more aggressive on taking profits at these levels. Because if you look over here on our sentiment chart, you can see that it was breaking that resistance, but the significant orders were just above there, and that's right where it started eating into those before it bounced back. So as it took out some of those orders, if you were looking here at all this significant resistance and you saw price starting to roll over, you might want to definitely tighten up your stop and start exiting some of your trade, because you can see that there's really heavy resistance and the market is going to struggle to push through here. Okay, but one thing you could do is as you're buying, you would see, down here when you're buying, you would see there's nothing significant, so you just hold it until it hits some of these darker areas and starts to pull back. So that's just one example. I could probably find you some more. But let me look at one more. Let's go maybe to the pound dollar. Let's go up to the daily chart. Okay. Let's see. Let me change that. Okay, so here's an example how you could have protected yourself in a trade that might have ended up being a loss if you weren't quick. Okay, so here was a nice trade to sell on the pound. Took off to target 1, made it up about 150 pips, and then it came back to the trailing stop. So one thing you could have looked at here on this trade is if we go over to sentiment, you can see that level that it was at here, let me see if we can zoom out. I'm going to have to go to the daily, or the weekly. Okay, so let's see if I can zoom in again. Okay, so this is back on the let's see. Yeah, this is back on the 31st. I'm probably going to have to go to monthly to get that far back. Let me switch that. Okay, so back over here is what we're looking at. End of July, so there was a sell order about right here. Get my little drawing tool out. Okay, so there was a signal from Momentix to sell. Let's see, that was on, I'm thinking it's about right in here. Let me get this, let me just scroll this one over so we can see. So yeah, it was coming up towards that next resistance and then it sold. Okay. Oh, maybe not quite actually. No, it was down here because let's get this spotted here. This is on the 30th. Make sure we're on the right. Okay, pound dollar, July 30th. Okay. So you got the 29th, the 30th would be about right there. So it is that just seems like a really long distance, but I guess that's right. Okay. You know, this can't be right, because if you look at, let's get these to match up. Let me just turn this into a line. Let's put this to a line. Let's get these to look the same so we can make sure we're looking at it correctly here. Okay, so now it's starting to, you can start to match things up. Okay, so here's that bottom. It came up, pulled back, came up, pulled back, came up. Okay, so this one is just much more zoomed out. That's why it's hard to spot it here. Okay, so basically if you're looking at when the market pulled back here, you're trying to find out if it was going to push through, you would see that there was support. There's this level of support here that it came down and hit buy orders. So that was right here. So see, when you're looking at your first target, you would look at it as, you know, this is a target 1 on Momentix, which maybe you normally don't think that's very significant, so you just start to scale out. But if you're looking over on the sentiment, you would see there's some significant buy orders there, and that's why the market bounced. So you might be more aggressive on exiting your trade there. Okay, so let's see. Let me back up. I've got some questions cruising through here. I don't follow you on how do you turn this program on. Are you talking about how to get Momentix on your charts, or are you talking about how to find the sentiment part on the website? Okay. To get more information on Momentix, you should be able to go. We had a webinar on it. I'll just post you a link here. Give me 1 minute. Okay, so you can actually just go to tradewestforex.com/Momentix/webinar. So I'll just post that in there for you. And then you can scroll down, you can see you can register for the replay and watch the replay there. Okay. Very valuable. Never seen this before. Never heard of it. Very good data. A lot of you, looks like you really like this, so I'm glad to see that. Yeah, so it's kind of like a radar screen, I guess. You can see where the potential levels are going to be, where the market bounces or breaks through. I pretty much prefer the daily charts now. Just you spend a lot less time having to stare at charts, and it's a lot easier to manage the trades when you don't have to watch every single bar develop. So, you know, I'll watch the daily charts. That'll also mean that this market sentiment information will be more significant on the, you know, those higher time frames as well. And the big gaps won't affect you as much. When you see this big white area and the market just quickly pushes through there without a problem, you know, that's a big move on a smaller time frame. And, you know, on a daily, that's not going to really affect you much to have a stop outside of here. Okay, well, I think we're going to take, I think, the last of the questions, so I'm going to close this one up. If any of you need help with this, getting access to this information, just send us an email or get on our live chat. Like I say, we'll get the replay up, and let me show you really quick where that'll go, so you can, everybody will know where to find that. We usually send out an email, so if nothing else, just look for the email for with the replay. But I'm going to post it, or I'm going to bring up the page and show you where you'll find the replays to our past recordings, past events as well. Okay, so it's just going to be tradewestforex.com/webinar/weekly. And that's where you sign up for each week, but below there is all of the replays from our Forex Weekly. So here's last week's What Makes Price Move. So you've got all these different sessions. You can go watch this. So when we get this one done, it'll go right below here. Okay? So thanks again for everybody for coming. It looks like this was a really good session. A lot of you seem to have learned a lot, and you liked what we've taught. So I'm happy to hear that. I hope everybody has a great weekend, and we'll see you in the next week's session.